there's now a bit of concern about what treasuries are doing and how they play with, of course, all of this fiscal stimulus that Joe Biden could be putting in place. What's trajectory for dollar given that?
Well, yeah, I think it's clear that this pickup in U.S. yields has been directly linked to a consolidation in the bear run lower, a very persistent bear run lower, to be fair, in the U.S. dollar. And now with a little bit of risk off to start the week, that also adds some support for the dollar. But I think as long as the yield gains are sort of tempered and don't extend much here, this is merely a chance for dollar bears to get involved again. And we still have some space, maybe 1% to up to 2%, for the dollar to consolidate without really affecting the trend here. So I'm still looking for the dollar to weaken, barring some crazy accident across asset markets, as the dollar will still trade as a safe haven in those types of volatility events.
John, what happens if we have a lot more fiscal stimulus? I mean, how does it impact treasuries?
Well, yeah, if the link to the U.S. yields running higher is anticipation of fiscal stimulus, it doesn't have to be dollar supportive at all. In fact, quite the opposite. That those higher yields are accompanied with much higher U.S. inflation, because we're seeing increasingly negative real rates in the U.S. And also because, as we saw with the November trade data and the trade data trends, the more the U.S. stimulates, the more it feeds external deficits. Who's going to want to offset that Treasury issuance from abroad? Basically, very few people will, and that is the story that drives the dollar lower.
John, what happens to emerging market currencies? Is this the next frontier, something that we need to spend a bit of more time on?
Well, if we're heading for a proper global reflation, emerging market currencies should be very well positioned for that. Part of the exercise has to be in the developed world to get to wind down this debt mountain, and you wind down that debt mountain with inflation, with negative real interest rates. The leverage there is far, far greater, multiples of what it is in many emerging markets. So if we're seeing a global recovery, a weaker dollar will certainly help as well. Emerging markets across the board should be the star performers of the next cycle. But it's just that a lot of this is rather priced in, and we're rather aggressively hoping, of course, that we get this vaccine rolled out quickly, and we're getting to the other side of that within, starting within a quarter or so. So we all have to hope, of course, that this turns out very well. The market is rather pre-positioned for this, but there's certainly more potential to come from a durable reflation trade in the next cycle.
John, what's your take on renminbi? If you look at some of the consumer prices in China, are they on a much better footing in terms of the economy? And so, are we going to see a more stable renminbi?
Well, we've seen a very stable renminbi. It's quite stable and quite strong at the strongest end of its of the basket that China has established for its currency. I expect it to stay at that strong end of the basket. You have China enjoying all of this fiscal stimulus from markets, especially from the U.S. You stimulate in the U.S. and that stimulus feeds straight through to China. They have the luxury of running a slightly tighter policy because of the stimulus they're getting from externally. It allows them to do some deleveraging. I don't think they want excessive strength, though, however, if you're looking at what the implications are for their exports. So just a strong and stable currency as we look at how the U.S.-China relationship shapes up under a Biden administration. That, to me, is really the big key, sort of longer term, this ongoing risk of a decoupling and what that will mean for China trying to launch its own credible alternative to the dollar as a currency for trade and otherwise to avoid the weaponization long term of the U.S. dollar and the U.S. financial system. So lots of big questions from here for all that in the mix.